But the other is, I think we're at this moment where Bitcoin is transitioning into an institutional asset class, right? You had the enormous success of the ETFs, and so some 90 billion plus. And you've had this kind of gradual transition, I think mainly curated by the ETFs and the Trump administration, the regulatory environment changing. Not to say there obviously wasn't a large buildup, right? Like of years of work being put into infrastructure. But I think those two elements, the regulatory clarity and the success of the ETFs, has tipped Bitcoin over where capital markets are now asking the question, like, how much exposure do we want to this asset? Like, what does our Bitcoin position look like? What do we need to do to be able to buy it? And one of the things you notice in a lot of sovereign wealth funds, very regulated hedge funds, and other institutional investors is they own MicroStrategy or they own MetaPlanet. And so you have to ask the question, why didn't they buy the ETF? Why are they deploying? Why is the largest sovereign wealth fund in the world, the Norwegian fund, buying so much MicroStrategy? Why not the ETF? And the answer is that having a corporate wrapper, having a corporate equity is a better fit for most people's investment mandate. It's a better fit for a lot of capital in the world. So you unlock new capital when you basically package Bitcoin in the form of a corporate equity, and then that doesn't even include that, and then you deliver growth on top of it. Like that concept is more native to, I think, a lot of people in finance. And I've seen this in my conversations with analysts at the investment banks in the US. So as part of my job for Nakamoto, I'm talking with these investment banks very frequently. And treasury companies, I think, make more sense to them than Bitcoin has. Bitcoin is complicated because there's no cash flows, you can't model it, it doesn't have a traditional growth rate. And so I think it's confused them for a while because you basically be like, hey, I mean, we think this thing is going to go up, but there's absolutely no way to model it or value it. Treasury companies kind of come back more into that traditional structure where there's a lot that I think analysts can do with these. And so I think they get it more, and it's a better fit for a lot of entities in capital markets.
Yeah, that makes a lot of sense. You get a lot of the benefits of Bitcoin, but with a traditional wrapper, which seemingly makes it a lot easier for people to dip their toe into the orange water. So I definitely get that. And when I was doing my due diligences before we knew we had you on the show, I saw that you've said before that Bitcoin treasury companies could become a primary vehicle for global capital to gain exposure to Bitcoin, kind of like we just spoke of. So that begs the question, how big do you think this sector could realistically get?
Yeah, so I think if the Bitcoin treasury thesis is successful, that there is market demand for corporate structures that not only accumulate Bitcoin on their balance sheet, but I think eventually transition to operating businesses and Bitcoin financial institutions, right? So in my view, what the treasury company is, it is the capitalization phase of future Bitcoin financial services, Bitcoin investment banks, and so on. And so I think if the thesis is correct and Bitcoin becomes a multi-trillion dollar, I mean, it already is a multi-trillion dollar asset, but goes up another 10x or 20x, the market will demand Bitcoin native financial institutions. It will demand financial institutions that understand the asset, that touch the asset, that have expertise in the asset, because that asset needs to be integrated into both securities markets, into banking infrastructure, into economic infrastructure. And the simple truth is most of the banks don't have the DNA and don't plan to, in any sort of short time frame, touch the asset. And so I think like many other trends in history, what ends up happening is that there are new players that come on the stage that build around the new phenomena, and those are the providers that succeed there. It's kind of like the mutual funds didn't launch the ETFs, right? Like the ETF providers were new companies that came in and did the ETF. It's rarely the incumbent that innovates, that captures the new terrain. And so I think we're seeing this capitalization phase for Bitcoin treasury companies in the sense that like you'll get some number of them that transition into these financial institutions. And then, you're looking at probably market caps in this end stage in the hundreds of billions or, maybe some that even reach the trillions of dollars. I think these become major financial institutions if the Bitcoin thesis plays out. Obviously, I'm a bull on that, and I think Bitcoin is going to become a key capital asset. But if that happens, the companies that have the large treasury and also provide services there are home runs. So I think for a treasury company, your value is the value you add via your operations and strategy, right? So it comes down
Mm-hmm.
to what are the actions you're taking that are specifically accretive or that specifically deliver value for shareholders, right? And if you have cash flow that you can deploy in a bear market, if you have better financing terms, if you have capital partners that are willing to lend you money in a bear market, if you have an investment strategy for the balance sheet that outperforms, kind of the market or Bitcoin or what have you. These are all ways that like through your operations and through what the team is actually doing, you deliver more value. And I think like that's how these companies should be looked at. It is not there is more to this than just say you're putting Bitcoin on your balance sheet and start selling equity. And that's certainly going to be where the market ends up is that it's not enough to just do that. And you can see it like diverging performances, diverging MNAVs across constellations of treasury companies. Like it does matter what you're doing. And that is where the value is derived from. It's derived from strategy, operations, and execution. I like to think of it as like treasury companies are similar to the miners in many ways. Miners identify pockets of cheap energy where they can arbitrage the value, the price of the energy to effectively buy Bitcoin for less, right? Like they're buying it through the mining process, obviously, but they're looking for cheap energy and they're turning cheap energy into Bitcoin. Treasury companies are doing a similar thing where they're looking for cheap capital and turning capital into Bitcoin. And so it's a similar model. And just like all miners don't have the same energy price and don't operate the same, all treasury companies don't have the same strategy or the same cost of capital.
That was very well put. Thank you for breaking that down. I know your time is limited here, so one more question. We'll get you out of here. So,
All
Stephen,
good.
if you and I were talking again in 5 years' time, what do you hope people will say about Nakamoto? That it built the first Bitcoin native conglomerate, that it brought trillions into the ecosystem, or simply that it orange pilled Wall Street suits one portfolio at a time? Or maybe something else? What are your thoughts?
All three sounds great. Be very
Fair
happy
enough.
with all three. We want to build a long-term Bitcoin financial institution. I think this is the vision of the team, and I think it's a good one. That like we do not currently have many Bitcoin financial institutions, and they're certainly not integrated at scale into the hundreds of trillions of dollars of the financial and asset landscape, right? Like this is a big world with a lot of value in it. And Bitcoin is a very small percentage of that. And Bitcoin financial institutions, even less so. So, we want to build Nakamoto as a business that engages with an evolving landscape, a rapidly evolving landscape for Bitcoin to build a Bitcoin financial institution that lasts. And so obviously that looks like responding to and capitalizing on market conditions as they arise, which will change over time. And there will be different opportunities. And it's one reason like we're definitely we value being active and being engaged here and also just leveraging decades of experience across the team collectively in the Bitcoin industry and I think a key position in those networks and interface with both traditional finance, the political landscape, and so on.
Yeah, and it seems like you guys have very smartly positioned yourself in a place to do so, and we're super excited to see what you and the team at Nakamoto will be drumming up next. I certainly, before we go, I know there's probably a lot of people in our audience that are very interested in learning more about what you're doing over at Nakamoto and where they can find more takes from yourself. So is there a good Twitter handle they can follow you on? Where's the best place for them to go and learn more about you and Nakamoto?
Yeah, absolutely. I'm very active on Twitter, very responsive to comments. DMs are open. So just my name, Stephen Lubka on Twitter. Check it out if you want to reach me. Also the Nakamoto handle, just at Nakamoto. Follow us on there for any key corporate updates and, and what have you. So we push all kind of major updates through there. And yeah, if you want to get in touch directly, I'm the right guy. I lead investor relations and just reach out on Twitter. That's easy.
Amazing. And last question, I almost forgot to ask you, Stephen. By the end of this year, 2025, we're keeping track of all of our guests, what they think their price prediction will be for Bitcoin by the end of this year. We're going to give a free Roxom Patagonia vest to the winner.
Okay.
What is your number? We have 200,001 and 175 are the most recent guests. So what do you think?
Yeah, so I'm going to give kind of a twofold answer. I think it's probably between 150 and 170, but I think it goes higher in 2026. I do not think the top is in this year. So I think we end the year in the mid to upper 100K zone. If I had to pick something, let's say 160. But that's not the top, and we've set new highs in 2026.